Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today I'm joined by Lady D. How's it going, Lady D?
Great. How you doing?
Good, good. All right, so I'll start the day by jumping into a little TA real quick and just kind of give you my opinion of where we're at today and what we might expect in the days ahead. So, just taking a little step back here so that we know where we're coming from. The market was in balance up here in the, we'll call it between 55.85 to 55 or to 56.65 area. We were in balance, and then we broke out to the downside. So we pulled back with price. We spent a little tiny bit of time, really just 3 days, balancing at the lows, and then we broke out back up. Okay. So by the end of the day yesterday, by the very latter half of yesterday, we were back up in this previous balance area. That is bullish to see. If we'd have just poked up, gotten into that area and then failed and started to pull back down, like towards yesterday's opening price, that would have been a sign to us that maybe the market wants to continue lower. Maybe it just needed to back test that previous balance area before it would turn around and head lower. But that is not what happened. Instead, we poked back up into that balance and stayed there for the rest of the day. We'd one little liquidation, but then we came right back up, stayed there the rest of the day. And then look at what the overnight just did. It spent the whole night going sideways inside that previous balance. So that, in my mind, increases the odds that there is still momentum in this market and that we are heading up towards that, previous balance area high. So what am I going to be looking for today to give me signs that there is momentum in the market? Well, as always, if we open with a gap up, the first order of business is to try to fill the gap, to try to get back to yesterday's high at 56.07. So that's the first question I'm asking myself. Can we get to yesterday's high? If not, if we immediately start to trade higher, get above the overnight high and get support, it's a gap and go. I'm very bullish, and we look for continuation to the upside, probably all the way to the other end of that previous balance. Okay. If we fill the gap, the question I'm asking myself is, do we find support around yesterday's high, which was also a very prominent overnight POC? Okay, so does the market come in there, bring in buyers, and then continue higher? If so, very bullish, gap and go, feeling good in the neighborhood. And then a third scenario is the market comes back, fills that gap, but doesn't find support at that gap fill, and it continues down into yesterday's range. The more time and the more volume that it brings in inside yesterday's range, the more likely it is not a gap and go. It is not going to turn around and just head higher. So then the question I need to ask myself from there, so I've watched the market fill the gap. I'm seeing that we're spending time and bringing in volume inside yesterday's range is, okay, now I think the market needs to pull back. How far does it need to pull back? To me, the very important level to watch today is this level right here around the overnight low, 55.94. That was also a weak M period low yesterday. And that was what was interesting to me about yesterday is the market, rotated in the morning. It went sideways for a while. It finally broke higher. It created that momentum to the upside. It had this liquidation here. And that to me was a really important moment of either we got the liquidation and new selling and we head back down to the opening price, or we reversed that liquidation back up. We reversed. So this at the end of the day was all new buying, right? Holding the market up here. So that M period low is particularly important to me because they were buying that at the end of the day yesterday. So while it isn't technically a spike, I'm thinking about it a lot like a spike in that if the market is going to continue higher today, we should stay above there. So if we fill the gap and we start to spend time and bring in volume inside yesterday's range, I would look to test that overnight low. I would look to poke below there, but I would assume it's just going to reverse and come right back out. That as soon as we start to get below there, we're going to bring in the buyers and the momentum will continue to the upside. Only really after that, only if we get below 55.94 and we get new selling there, will I really get bearish that we need to pull back and start repairing the other weak references that we left behind. Okay.
Yeah,
So
Charles, I just want to jump in because I know Jim Dalton always talked about the importance of the afternoon pullback low, which in this case is the M period low. And I think what's really important to watch is that if the market tests that and then single prints out of yesterday's range, then that's just super bullish. And it can happen really, really fast. But if you see that single printing out of yesterday's range and continuing higher, it's really, really bullish.
yeah, absolutely. I mean, that's basically the idea is that once we re-enter this previous balance area, the most obvious place for the market to go is the opposite end of balance. Like
Right.
that's where the market's going to go. It just is. Look, it did it there, it did it there, it did it there, it did it there. You know what I mean? So it's like you just know it's going to the opposite end of balance. So all we need today is any signal that that's happening, and we should get bullish quick. Because,
Yeah.
like you said, it may not. It may sometimes you get a very slow grind up to the opposite end of balance, but it can also just literally in a few hours make the move all the way there,
Yeah.
and you can get left behind. So yeah,
Right.
filling the gap and finding support would be very bullish, or looking below and failing that M low would be bullish.
And what are your thoughts on the fact that the rally yesterday was so fast and not like it, not a ton of volume? Because sometimes that can indicate like it needs to backfill, it needs to go back and re-look at those areas, or it could just shoot straight up. So it's just like this is one of those moments where mentally we have to be so flexible and think really quickly on our feet and just try to see all this happening in real time because the argument could be made the other way too, that this happened so quickly, it's going to have to go back and, maybe refills. There's multiple single prints in yesterday's profile.
Yeah, they're on the
At least
NQ. There is not on the
on the
ES.
NQ, I have at least four.
Yeah. So I was watching the ES yesterday. In the morning, I expected it to chop and go sideways and grind. Everything about it felt that way. It just felt like, and of course, we know it's very rare the market goes nowhere all day these days. Generally, at some point in the afternoon, it makes a break. So all of that seemed normal to me. The balancing and then the breakout later on in the day, that all made sense. I will admit the breakout did seem a bit strange to me that it kept going and going because, like you said, the volume was paper thin the whole way. They
Right.
weren't really bringing in new buyers, but I was with the momentum the whole time because it moved like that exactly the same way the previous day. So
Yeah,
if
that's
you were
true.
watching the afternoon the day before yesterday and you were watching yesterday, it was like clockwork, looking particularly at the book map and the way that the bots were, the way the icebergs were coming in. It was just like clockwork. They were just continuing to press the market higher and press the market higher and press the market higher and do it in this very exact way. It was like stair stepping up. So yeah, I was thinking to myself, I kind of have to ignore the market information right now from price action because it was such thin volume.
Yeah.
And I did expect once it started to liquidate in, I think it was the H period, a K period. Once
Okay.
it started to liquidate, I did think it was going to liquidate all the way back to the opening price.
Really?
But as soon as it reversed back up, I was like, nope, we're going to close near the highs. It was just a repeat of yesterday.
Yeah.
And so the unpleasant answer is I think it's machines. I think it's the hedging of the options market and the way once they program their machine for like we're taking this market higher, the machine just buys. It was like every 5 points, it would just buy another 1,000 contracts and another 1,000 and it just kept showing up these icebergs and pushing higher and pushing higher. So
And that I think that's one thing to keep in mind too, which is really has shocked me in the past where I used to get caught in trades where I think, oh, it can't keep going higher. It can't keep going higher. And it just does. It doesn't stop.
yeah.
And I think it catches a lot of people off sides because people keep thinking it can't keep going. But I mean, that's another thing Jim Dalton used to always say. It's like it can push so much farther than you ever believe it could. So always go in the direction of momentum. Never fight momentum.
Yeah. It will
And
shock
this
you.
was a perfect example of this yesterday.
Yeah. And that's
Yeah.
the thing is like, traders always want to know how to be in the trade for every tick that the market moves. It's okay if a market is made a big move to the upside and you feel like it's overextended and you feel like the volume is thin and you think it can't keep going. It's okay to just be flat. It's
Right.
okay to just say like, I don't trust it. I don't think it's going to keep going. I'm going to step aside. But what
Yeah.
you don't want to do is try to reverse, try to go the opposite direction of the trend because you think it'll always look like, oh, it's about to break, and then boom, it'll shoot up another 10 points, and it will drive you fucking nuts.
Yeah. And it's shocking, like, that it doesn't retrace hardly at all. I mean, with that many groups of single prints, it was just like, and how much of that do you think was short covering?
Again, I wasn't watching the NQ. I was watching the ES. It wasn't short covering. It wasn't emotional. It was computers. It was like you could literally watch it on Bookmap. It was like they'd push it a few points higher. They'd go sideways. Red iceberg, green iceberg, red iceberg, green iceberg. Then the red icebergs would disappear, and it would boom shoot up the next few points. Red iceberg, green iceberg. It was like it was mechanical. It was just completely mechanical. And I talk about in the workshop, this guy Jam Croissant from Twitter, and basically what he talks about is, there's this mechanisms where the market just can't go down during certain periods of time because of the way the market makers are hedged and the way that they're set up their portfolios, and it's too complicated for me to explain. But that's what it felt like to me. It just felt like mechanically the market wasn't going to go lower. And traders tried to take it lower all morning during that chop. And so we just got to that point in the day where it was like the short sellers gave up, and then the market just drifted up for, an hour and a half.
It's crazy.
But it was nuts the way it just, like tick for tick, it just kept going and going. No pullbacks.
Pullbacks.
Nothing.
Not
just
one.
Go. Yeah, it was nuts.
Yeah.
So anyway, that's my analysis on the day. I would describe myself as bullish. I would describe myself right now as assuming the market is going to find support somewhere inside the overnight range and continue higher today, at the very least to get above the overnight high, maybe even all the way up above the 56.37 area up here. But I need to first make sure we don't get below that overnight low. Everything changes if we get below that overnight low and we get new selling.
And Charles, would you say the overnight low, it sort of looks like a 45-degree angle, but it's not actually super perfect? Would you consider that a 45 or no?
Yeah, I mean, you could consider both ends 45s. Really.
Yeah, that's what I was saying. So
it's just, it was just a tight overnight range.
Yeah.
I generally, when I see this, I don't really pay attention to it at all. I don't think about it like a 45-degree angle. Mm-hmm. I much more focus on a 45 if like one side has a 45 and then the market broke the other way. And so we're like all the way up here.
Right.
Then I would trust it much more. But I do find it very interesting that the low is exactly at that M period low from yesterday. I mean, it's so exact. It seems very machine driven. So that's all I've got. What do you got for us today, D?
Well, I wanted to replay the NQ yesterday just because so many things happened so quickly. I thought it might be fun just to go kind of watch it. We'll do it really quickly. And maybe it's just point out a few little details of how we could have stayed on the right side of this after, like you said, the chop in the morning was slightly confusing. And it kept poking down into that overnight range, which, to me was a little bit not super bullish. But then what I did notice, I want everybody to really pay attention to the M period from the previous day, because that is where I think the clue was that this thing was going to take off from that. It never found acceptance below this level. So do you want to watch it?
Yeah, let's do it.
All right.
The chat
do
loves
it really
replay.
Quickly because I know we're almost out of time, but so here's yesterday on the NQ. So we're still in the spike. Obviously, I'm watching this M low right here. You can see we have a lot of resistance in the overnight too, which I was watching to see how difficult it was going to be to get through that resistance in the overnight. Still in the spike. We have this little liquidation. Here's the bottom of the M period. Now, it didn't even get to the bottom of the M. So some people would consider the spike here. I consider the spike down there, but it didn't need to even test the base of that spike where I use this spike. So to me, that was already the clue that it was bullish. Now, what was a little confusing, it was spending time in building volume at the beginning of the day inside the spike and the overnight range. So that was a little bit a piece of conflicting information, but I was still focused on continuing this momentum from the previous day and going higher. And I did have that balance area low as my target. from that previous 10-day balance area low that we talked about last week. Okay, so now we're getting up to the overnight high. Again, looking at it right here, this really singled out, looks like single printing out of yesterday's range. So now, to me, this is super, super bullish. But it does come back and tests the support one more time, I think. Yeah. So here's where, yeah, so it came all the way in again, but didn't even get halfway into the spike and got kicked out again. So it's so much easier to see when it's so fast exactly what's happening. So for any of you that got caught going short, hopefully this replay will help you next time to just really stay in the moment, keep the information that the market's giving you. It's a single printed outside of the spike that's really, really bullish. And just keep focused on that, even though in the chop it's trying to confuse you. Because when this thing took off, it was like a rocket.
When you're trading the NQ, how do you handle that kind of crazy, those huge ranges? Do you just use really wide stops, or what's your take?
No, my stop is I always have my stop pretty tight. Like I didn't want it to go below the M period low, which I was using as my stop.
So, but I'm saying, so it pushes, it gets above the previous day's high. It has that massive run. Are you moving your stop, or are you just waiting?
I don't. On the NQ, what I've learned is I generally keep my stop. I know where my stop is. If I'm wrong in my analysis of the market, I'm willing to get stopped out, and I take that loss. I don't, and the NQ, it's too risky. If you're moving your stops a lot, you're just going to end up getting stopped out, even if you're right. So I feel like you need a much bigger leash on the NQ in terms of your stop placements than you would on the ES.
Yeah, that's
on
great.
The ES, I would move my stops, but on the NQ, I don't. Where is the point in the day where I'm wrong in my analysis, in my initial thinking, and I leave my stop alone? If it takes off, once this thing took off to the upside, then you can move your stop obviously to break even or move it to above the range. But see, it kept coming in. This is where I think a lot of us were probably getting confused on the short side, is it did re-enter. Look, it re-entered the previous day's range again and stopped one time framing early. So now I'm thinking, okay, is this thing going to be rotational? That was the second option for me, was if it's going to be a rotational day. But I kept focusing on this area right here where there's still a lot of time and volume coming in. Right down here. This was a very important level. And this is where it's chopping, chopping, chopping. This is what the market does to confuse us all. It spends a lot of time just making us go crazy, right? Before it takes that move. But I knew it was bullish. We knew we had the spike at the end of the day. I was staying on the side, the long side. Unless there was anything that happened below this M period low, I was long.
Yeah, it's funny how different personalities. I would never be able to do that.
Really?
I would never be
Why
able
not?
to watch. Well, I could stay in it until they got cessation. But at that point, I'd be thinking, if the market's going to start rotating, it might come back for the low. Might as well lock in some profits here and then look for a trade later on. But that's what I'm saying. Everyone's different. That's why I could never really be an NQ trader, because you have to sit through such crazy volatility.
It is
100-point moves one way or another, and you got to just fucking stay in your position.
Yeah.
It's not easy.
But that all this time and volume cement here, that the big money is just accumulating positions for whatever the bigger move of the day is going to be, right?
Yeah.
So it kept coming back in this area so people could buy in at a lower price, the institutional investors. That's my opinion. That's what was happening. I kept re-entering lower prices, but the big thing is it never got below that spike. That was my level. That was my important level for not being bullish. And then watch what happens. This is just so crazy to me. And here I marked this large volume node here as a potential place that we might see resistance.
So note that it's bouncing around on the high, and then what happens when it finally kind of breaks through and gets away from this high.
I know, it's so
that's its final little tug of war spot, and then doot.
So see, there was a little retracement at that volume node, not much. So now, though, we're spending time and bringing in volume above the overnight high and above yesterday's high. So there's no way that I'm going to take a short trade at this point.
Yeah, definitely not. Now you would be fighting momentum, looking for a short. And you might be thinking to yourself, but the market's been rotating. It's been like all morning. It's been going sideways. Shouldn't I be getting into a rotational trade? But this is the point of that Jim Dalton quote. It will shock you how far they can push it.
Exactly.
Like, it can shock you. Like, don't take a trade where you could get shocked. You know what I mean? So if you don't trust the long, if you don't think they can keep going, that's fine. Don't get long, but you just don't fight the momentum.
Yeah.
Because once it started this thing, it just never gave up till, an hour and a half later.
Exactly. And then it went, all day long. So that's enough for this. I just wanted to, I wanted to talk about the open and how, it really did stay in this range and built all this time and volume, inside the spike. And then once this thing broke out, it was, it was fierce.
Yeah. What I took away from that I think is really an important takeaway for people is the simplicity of the read, right? It's like, we had a spike up the day before. As long as we stay inside that spike, I should be bullish. I should assume this market is going higher, even though it faked you out, even though it was choppy, even though it was very confusing, even though it did a long period of time in a tight range, and then it did this big, massive move very quickly. Even though all of that, with the simplicity of the read, as long as we're above the base of the spike, I should be bullish in the market. I should be assuming the market's going to continue. That is one of the hardest things I find to teach people. Yeah. It's like people want to make everything so complicated. They want to look at every little data point and everything changes their mind. And it's like, I just keep saying, the simpler you can make it, the easier it is.
That's so true. Because honestly, in the A and B and C period, when this stopped one time framing and D and E, it was like, I knew I'm bullish. This was my, before I even opened the day, after studying my charts and marking my levels, I knew I wanted to be bullish. And I started getting doubts when that stopped. And I said, don't get confused. This is what they try to do on purpose. They try to confuse us all before they make that move. But like you said, the simple information was right in front of us. Spike up, end of the day, didn't find acceptance below the spike. This thing is bullish. So I think they particularly on days like this try to confuse us in that early, AB period during the IB. But yesterday I really kept to my guns in the morning, and I'm glad I did. So I just hope that this helps, other people in these situations. And also, I just want to point out that there's a level that I'm really watching up here from. There's multiple weakened poor highs at the top of this balance area that we just re-entered. So I am really watching these levels up here for the market having to come up here and repair all of this weakness that you see.
Can you just name off a level?
Yeah, it's at 19701. There's multiple weak references, poor highs from 829. I think there's another one before that. Yeah. So anyway, I know we got to bounce, but I just wanted to point that out to everybody that up here there's a lot of weakness. So keep your eye on that.
So both D and I are in alignment on that. For both the NQ and the ES, we've re-entered previous balance. If we get signals this morning that we have momentum up, we can assume they could go all the way to the opposite end of balance. Now, it doesn't mean they will for sure, but they certainly could.
And not necessarily today, but just these are the levels we have to keep our eyes on for, next week for sure, if not today.
Yeah.
So cool.
It'll probably happen today, Dee. They'll go nowhere for 4 hours.
Yeah.
And then they'll go to the opposite end of the balance in about 5 minutes. That's what's going to happen.
True.
All right.
That could be true. So just stay open, stay alert, stay flexible, keep your mind. What do you say, Charles? It's like water. Be like water, my friend.
Yeah, that's the thing. It's like if you pour water into a glass, it becomes the glass. If you pour water into a teapot, it becomes the teapot. So if the market is telling you balance, be a balance trader. If the market suddenly tells you momentum, be a momentum trader. Go with whatever the market is giving you in that moment.
And never fight momentum. The trend is your friend.
Yeah, it really is.
I wish I'd learned that a lot earlier. I'll tell you that. All right. So really quickly, news, not much to talk about except today there was a little bit of news that the economy is weakening a little bit. And now the economists are saying that there's a big possibility next week from the FOMC meeting that we're actually going to get a 0.5 interest rate cut instead of 0.25. So whether that's going to be, good or bad for the market, we'll see. But that's really the major news that came out this morning.
Perfect.
Cool.
Well, happy Friday the 13th to everyone. Enjoy the weird shit that's going to happen today. And we'll see you on Monday.
Okay. Thanks, guys.
Thank you. Bye.
Happy trading.